Yeah, hi everybody. Pretty brutal day today in the market, and I just want to cover a few things here. First of all, the sell-off was being ascribed to Caterpillar when I guess it was a CEO or CFO who said something about expecting that this quarter would be the peak in earnings, and the stock had initially gapped up to close to 161, I think, at one point, or above 161 just barely, and then reverse hard on a huge outside reversal day. And what I think is interesting is that's what they're trying to say was the cause of the sell-off. But if that's true, why did we see, names like Netflix got hit hard? It was down 11 bucks. Nvidia reversed. Square just got bombed. You can see here. This thing just got nailed. And as soon as it breached the 20-day line, to me, that's a short this morning. And you could use a 620 chart on this. Uh, to pick this off, if you guys, here's a 620 chart here. And this is pretty early in the day because we opened up at 6:30 here, and you already had a sell signal running on both the MACD lines here. So, the thing about my long watch list, and you guys might notice I never show my short watch list because my short watch list is my long watch list. And in this market, I've been telling everybody this is a trendless, choppy environment. There's no big money price moves where you're going to make a huge amount of money buying a breakout and just letting it run. It's just not that kind of a market. It's choppy, it's sloppy, things can change very quickly. It's news oriented. What was a long yesterday can become a short today, and you can get some very nice price moves in either direction. So for me, or from my perspective, this is a swing trading environment. I've been pretty frank about that in my reports and also in these videos. And so I'm trying to go long if I think something is setting up. I had overnight. I had an actionable watch list I had put together, maybe about 12 names coming in this morning, and every single one of those things got blown out. Same thing happened yesterday. So when that happens, I know right away this market is just not setting up for the long side, and what I'm looking at on the long side can easily turn into a short, and I'm willing to go either way depending on how things set up, because we know that something like Square, for example, is rallying back above the 59, but you never had any big volume. These are some, increases in volume, but still well below average. And so this thing comes up like this. It's still in a potential failure position. And so when things start getting ugly this morning, you can see it right off the bat. Early in the day on the 620 chart, you're already starting to fail because you're crossing here. My pins. You're crossing up here, and you get the 6 period line is below the 20 period line, which is the blue one, the yellow one is 6 period, and then you also have the cross here in the MACD ahead of the opening. And so I'm already looking at this thing like, okay, they're going to open it up. Let's see where I might be able to short it. And because tomorrow was already starting to reverse early in the day, and they're getting these things jacked up, and Cat was up, and that looked really good. And then you can see Cat reversing right away early in the day, uh, right around here at about 8 o'clock. The MACD started to cross. It was a little funky because they opened it up right at the opening and they just tracked sideways. And I guess this is when they were having the conference call and it just started to break, and you could just jump on it short there and you get a very nice breakdown today. But you have to be alert. You have to be willing to take a shot, and you have to be willing to be wrong, because these things aren't necessarily going to bust for you the way they did today. And unless you're willing and able to come back, short something. If it doesn't work, back away, come back and short it again, back away if it doesn't work, and just keep doing it until something breaks. Especially where you see things that look like they're in trouble. Like Netflix, I'd already talked about, I think, in my last report, that for now support is the low at 123, 23.77 was the low of the BGU day, which is here. And I said, that's support for now. Okay. And that's being aware of the fact, or maintaining awareness of the fact that this thing could fail here. If this is a base breakout and a viable gap up, then you failed through the low of that. At that point, to me, my little antenna go up, my shorting antenna go up, and I'm looking at it as potential short. And so yesterday it turned into a short. It broke uh, the low here. And the other thing that you could have keyed off of was the news that they're going to issue 1.5 billion in bonds. So now they're going further into debt. and they've got to produce all this content, and who knows how that's going to play out. And so the thing is very late stage. If you look at a weekly chart over here, it's pretty late stage. This is a weekly. You have a nice big trend that's been going on for a while. So a little parabolic towards the end here, and little V-shaped pattern in here, and it's failing. It's now broken the 20-day moving average. So in my book, that's the first sign of failure. Now, the 50-day moving average is usually where you find the first level of support. So we'll see if we get a bounce off of here, and then it rolls lower. So I'm not sure if that'll happen. Maybe it'll push back up to the highs. It really depends on what the general market's doing. But right now, the general market looks like doo-doo. So let me just kind of flip out of here real quick, and we'll look at the index charts. Whoops, here we go. So here's a NASDAQ, and the NASDAQ, had a nice run, very steady, persistent rally until the end of January, and then it started to roll over. We broke. And you got to new highs. You saw at the peak, little quasi-abandoned baby. Somebody asked me the other day, they emailed and wanted to know, why don't you use candlestick charts in your analysis? And my view is that candlesticks don't really add anything. I look at them, and those of you who've been longtime members know that I will show them in the reports from time to time. But in terms of predictive value, not really that useful. You can use them. I mean, I like them. They're fun to look at. I look at just about any kind of chart, even point and figure charts. But most people use bar charts, and in my view, all you really need are bar charts. So if you want to get fancy with candlesticks, whatever, you can. But anyways, this failed. You break down, test these lows, bounce off point near the 200-day moving average. You rally back up. No volume on the rally. You run out of gas. Now you're breaking, and you're getting more volume today. So it looks like we're headed for the 200-day line. That's what it looks like. Maybe you undercut this low, and then maybe you see some sort of a turn. But who knows? I mean, the bottom line is, when you look at this pattern, all you see is a choppy range. You don't see an uptrend, and you don't see a downtrend. It has uptrends and downtrends within it, and that's where you get the swing trading action. So, and that's why I say there are no big money trends, but there are a lot of tradable trends in terms of the short-term movement. But you have to be nimble. You have to be willing to take the risk. You have to be willing to be wrong and to come back over and over again sometimes in order to achieve success and make money. And you may not make a huge amount, but I think you can hammer it out. You just have to be persistent. I think it does require some experience. So, it's very hard for me to come out and just say, oh, everybody short this, short that, because I don't really know. It varies on a day-to-day basis. And like I said, what I might be looking at long can easily turn into a short. I'll give you an example. This morning, I was looking at CSX, the railroader, as a long this morning. It was actually gapping up. Cat was gapping up. It looked like a long, and I'm just watching it on my 620 chart. And then I just noticed early in the day at around 8 o'clock, we got a cross here. So to me, that's a short. I'm going to go short. And boom, it breaks. I wish every time I shorted something it broke like this, but you don't put yourself in the position of getting lucky by not taking a position. You have to put yourself in that position. Now, I could have turned around and headed back up, and I probably would have stopped myself out at like 61 or the highs of the day, but it worked, and you just got everything rolling in the right direction. But you already knew that the market was weak. We already know that we're seeing some leading stocks, Facebook, Apple, NVIDIA, a lot of these things are starting to falter. And so you kind of have the ingredients leaning that way. And like I've been saying in the last couple of reports, this is a bifurcated market. In other words, over the past few days, you've been able to be long some things, and you've been able to be short some things. Something that has been working pretty well is SailPoint, for example, but it may have pooped out at this point. So pardon my scatological references, but I guess I'm in a poopy mood because of how poopy the market is, but in a good way, because it was possible to make some nice money on the short side today if you're open to it. First Solar, another possibility. I also shorted this. Didn't make as much money, but it basically filled its gap. And you had a gap up move the other day. Today they came out with earnings. They opened up and reversed with the market, but now you filled the gap. You're holding at the 10-day line, so it's not a failure. So it's not really something outside of getting a day trading scalp that you would short. Square is very nice. First Solar, Weight Watchers, just because you're seeing this thing There's no real volume in it, but it's drifting higher, and then bam, you stall and you break today, and the market's rolling over. So just about anything you shorted, you could have made a fair amount of money. Like some of these that I thought were longs, or looked like they were longs, and they were for a little while. Service now just blew apart right through the 20-day line. So this maybe is a late stage base, and now it's failing. The other names in the group that I was looking at, Workday, for example. This has failed in the biggest possible way. Look at it, it's a huge volume, big spike here, well above average, just a huge price bar and reversal, big outside reversal, Salesforce. And you ask yourself, if it's all due to CAT, then why were all these other names blowing up like this? And I think there's something worse going on. We'll find out what it is eventually. Doesn't mean you can't get a bounce in the next couple of days if we undercut some lows. Then I would obviously be looking for undercut and rally moves. But, I think you got some problems in this market that need to be worked out, and before we get some sort of a real playable big money trend, as I call it. So anyways, I noticed after the close, some names rallying. Texas Instruments is up around 103 right now. This might turn into a short tomorrow. I'd keep an eye on it. Cree is another one. This thing is actually trying to break out. Up here, it's breakout. And they're going to open up around 42.50 tomorrow, I think. Well, at least based on where it's trading at now. But you got to break out, drop below the 50 line. You're going to rally. You're back up near these highs at 42.50. So that might be something to look at in the morning. I was looking at INFI is up a little, I believe, after hours. Yeah, it's at 32.40 after hours. So you're basically just to the top of this range, close to that. So I don't see that as necessarily a huge move, but where you've had these upside moves after earnings, you've been able to short into them over the last couple of days in some cases. So that's something I'm really open to right now, and we'll just see how things play out. I'm looking for a move lower in the indexes to the 200-day moving averages. Let's see. Here's the S&P is right near its 200-day moving average. So, will we find support here? I guess we'll find out. But today was a pretty ugly day, and a lot of stocks are breaking down, which doesn't look constructive. I think it's the most, you might be able to get a bounce on something and trade that if you know how to use undercut and rally moves. But otherwise, it's a death warmed over. We take a look at my down with volume screen. 130 something items, and this is pretty brutal if you want to look at ugly charts. And I thought it was kind of funny because I got an email after the close from IBD telling me that today's sell-off wasn't as bad as it looked. And I thought to myself, okay, I don't know what you're looking at, but it looked pretty bad to me. I must not be looking at the right stuff, though. Maybe, if I'm looking at Square, I'm looking at the wrong thing. That's not as bad as it looks, in case you were wondering. So if you're long stock, you're down $4, almost 9%. It's not as bad as it looks, okay? Go figure. Crane, look at this thing. Just getting blasted. Huge breakdown reversal, another outside reversal. Watts, look at this. This is like the Hall of Fame of death here. These are all the ETFs that got blown up. CAT, there's CAT. Lockheed Martin. Defense stocks were acting pretty well lately. Raytheon also got raked today. We're going to call that Raytheon. This one came off, and it's just brutal. PagSeguro, this is one that we played off the 50-day line, but it did not hold the 20-day line. And remember, if you're looking to buy something on a pullback to the 20-day line, that's your selling guide. If you start drifting below that, I'm usually gone, a dime below, usually right at the line, sometimes a dime above. If it's not looking right, I'm gone. And this thing's a thin name because no, I take that back. It trades 2 million shares, but they really hammered this thing. So it's more price point than, in other words, it tends to be a little volatile around price points because you see a lot of swinging around. So that's a different type of thinness that you'll run into. Stocks will trade over 1 million shares a day, but they'll have this weird tendency to wiggle around a lot, which is what I call price point thinness. So you learn something new every day. Coupa Software looked like a nice breakout yesterday, but it just gets reversed today. VeriSign got blasted. Proto Labs, this is another really thin 3D printer. New Relic, blasted. You can just go down the line. There's so many names that got smashed today, and I think I made some notes on some. Just go through some of these. Viva got smashed, and that was looking like it might be pretty good. Facebook got smashed today. PayPal was looking like it was on the comeback trail, and it got smashed today. Boeing, big outside reversal, it got smashed. Casa, this is a thin name, trades 710,000 shares. It gapped down and just blew up today, so you can see that. Big, ugly gap down move. Kaboom. That's what we call the gooey kablooey. Let's see, what else? Splunk, this is in the cloud software realm. Grub, which was actually looking good yesterday. I played this on the long side, but I sold it when it was up, and then it reversed. Now it seems to be breaking down. They got earnings coming out in the next week, I believe. iSearch failed on the Bible gap up, so it's filled the gap, but that's not looking too good. So I got a couple ideas on the short side if we have some gap ups tomorrow in Cree and Texas Instruments. In the morning, maybe those would be shortable. Others I'd be watching for too that come out with earnings if they gap up. Twitter is going to report before the open tomorrow. Facebook is after the close, so we'll see what happens with those. But just a brutal, ugly day, and a very nice day on the short side for those of you who can see it and are willing to take the shot. But you got to be flexible, and that's why I won't come out and put up a blog post that says go short this, short that, short this, because it's so fluid and it's so funky that it may be go short now and it doesn't work. Now go short later again. Now it works. So it's really kind of like that, and it's not really a market where you can say definitively do this, do that. It's really fluid. It's funky and very news oriented. So that's what we're faced with. Deal with it. So anyways, you guys, report out tomorrow. Hope you enjoyed this. We'll catch you next time. Take care.